New banking change could delay or lock up your Social Security deposit. Here's what you need to know right now. If you receive Social Security, SSI, or SSDI, pause what you're doing and listen closely. A significant banking-related policy shift is quietly being rolled out across the United States, and millions of older Americans have no idea it could directly affect how and when their benefits reach their bank account. This is your monthly income, the money you rely on for groceries, prescriptions, rent, and day-to-day bills. This is not a rumor, and it's not political chatter. This is a real operational change that many financial professionals are calling one of the biggest updates to hit seniors' bank access in years. So the questions are obvious. Could your deposit show up late? Could your account be restricted with little or no warning? Could new identity checks temporarily block you from using your own funds? Every American over 60 deserves clear answers today, not weeks from now. I'm going to explain it in plain, simple English. No confusing bank speak, no agency jargon, just what you need to protect your benefits and your peace of mind. Let's get into it. How we got here. The background you need. For decades, the U.S. banking system has operated with rules intended to protect consumers, including retirees and disabled Americans who depend on fixed income like Social Security, SSI, and SSDI. Those protections grew out of hard lessons from financial crises, bank failures, and cases where ordinary people were locked out of their own money through no fault of their own. The system was never flawless, but it had guardrails. And for most people receiving federal benefits, those guardrails meant something simple. Your deposit arrived on schedule, landed safely in your account, and you could use it without drama. That predictability mattered. But here's what's changed. Over roughly the last year, federal-level discussions inside agencies like the Federal Deposit Insurance Corporation, FDIC, the Consumer Financial Protection Bureau, CFPB, and the Office of the Comptroller of the Currency, OCC, have focused on how banks handle government benefit deposits, how accounts are verified, and what happens when an account is flagged for review. Most people never hear about these discussions because they live inside guidance memos, compliance updates, and policy meetings most of us will never see. But the results eventually make their way down to your checking account. So, what is this new rule, and why should you care? In plain terms, it centers on tighter account verification and stronger fraud prevention procedures. Banks are under major pressure from regulators to reduce fraud connected to benefit payments. Billions have been lost over time to fraudulent Social Security claims, identity theft that targets seniors, and fake accounts created to intercept deposits. And yes, fraud is real, and it does need to be addressed. The problem is how some banks are responding to that pressure, because the response can create serious complications for legitimate seniors who have been receiving benefits for years without any issue. Here's how it can work in practice. When a bank receives a large deposit, an unusual deposit, or sees account activity that automated systems label out of pattern, the bank may have the authority, and under newer guidance, sometimes the responsibility, to pause the deposit, review the account, and in certain cases restrict access while the review is happening. For many people, that might sound like a temporary inconvenience, but for a senior living month to month on Social Security, waiting 3 to 5 business days can be devastating. Rent can be late. Food becomes a problem. Medications get delayed. This is not small, and it gets even more complicated. The updated guidance also ties into Know Your Customer rules, requirements banks already follow but which are being expanded and refreshed. Under KYC, banks must verify customer identity and confirm accounts are being used legitimately. For younger customers who use banking apps, update details regularly, and respond quickly to texts or emails, these verification steps can feel invisible. For many seniors, especially people without smartphones, with limited internet, or who don't check email daily, an identity request can be missed until it becomes an emergency. What this can look like in real life. Let me give you a realistic picture. Imagine a 74-year-old woman named Dorothy. She's lived in the same apartment for 15 years. She's used the same bank and the same checking account for over 20 years. Every month, her Social Security deposit hits on the second Wednesday. That money pays bills, covers groceries, and keeps prescriptions filled. Then one month, her bank sends an email asking her to confirm identity as part of a routine compliance update. Dorothy barely checks email. She never sees it. 2 weeks later, her account is flagged for review. Her Social Security deposit arrives, but she can't access the funds while the review is open. She goes to the bank and is told she must provide 2 forms of ID and proof of current address before access is restored. Eventually it gets fixed, but not before she misses a bill and spends days without her money. Versions of this are already happening to real people. Aren't Social Security deposits protected by federal law? You might be asking, isn't there federal protection that prevents Social Security deposits from being taken or frozen? The answer is yes. There are important protections, but you need to understand what they cover. Federal law provides safeguards for electronically deposited federal benefit payments when the bank receives a garnishment order, meaning someone is trying to collect a debt from your account. In that situation, the bank must review the account and protect a certain amount of benefit funds from being garnished. That protection is real and it matters. However, and this is the key distinction, that protection is designed for debt collection and garnishment. It does not stop a bank from placing a temporary restriction for compliance review, identity verification, or suspected fraud. Those are treated differently under banking rules. So let's be crystal clear. If a creditor is trying to grab your Social Security funds to satisfy a debt, that is generally restricted, and the bank must protect certain benefit amounts. But if your bank flags your account internally for compliance reasons, the bank may still have legal authority to limit access while it investigates. Knowing which situation you're in and what to say and do matters. Why this can hit SSI and SSDI recipients even harder. Now let's talk about SSI, Supplemental Security Income. SSI is needs-based, designed for people with very limited income and very limited resources. Payment amounts are often smaller than retirement Social Security, or SSDI, and recipients are often among the most financially fragile Americans. For an SSI recipient, being locked out of benefits for even a few days isn't an inconvenience. It can become a true crisis. And SSI recipients can face extra hurdles, limited documentation, shared living arrangements that complicate address proof, weaker credit history, and fewer backup resources to ride out a delay. SSDI, Social Security Disability Insurance, has its own challenges here too. SSDI recipients earned benefits through work, but can't continue working due to a qualifying disability. Many are managing serious medical conditions that make it difficult to respond quickly to bank messages, travel to a branch, or complete multi-step verification procedures. Some face cognitive impairments, mobility limits, or mental health barriers that turn simple paperwork into a major obstacle. Fraud prevention rules weren't built around these realities, and that disconnect is part of the problem. What you can do right now to protect yourself. Now we get to the most important part. Action. Knowing the risk exists is only half the battle. The other half is taking steps now so you're protected. And so if something happens, you know exactly what to do. I want you to leave this feeling informed and prepared, not scared. Step 1. Confirm your contact information. First, make sure your bank has your current contact details. This sounds basic, but many people haven't updated a phone number or email address in years. Banks increasingly send verification and compliance notices automatically. If alerts go to an old number or an email you don't use, you won't see them until your account is already restricted. This week, call your bank or visit a branch and confirm your phone number, mailing address, and email if you use one. Step 2. Learn your bank's direct deposit review policies. Second, ask your bank how it handles Social Security direct deposits. What triggers an account review? How long can a review last? What documents would you need to remove a hold? Write down the answers. Get the representative's name. Knowing the process ahead of time keeps you from trying to figure it out in the middle of a crisis. Step 3. Consider a small backup cushion. Third, think about keeping a small emergency buffer in a separate place that isn't tied to your main benefit deposit account. Even a few $100s can buy time if your primary account is temporarily restricted. That could be a savings account, a second account at a credit union, or a prepaid debit card you keep funded for emergencies. I know that's not easy on a fixed income, and I'm not calling it a requirement, but it can help. Step 4. Keep key numbers easy to reach. Fourth, keep essential phone numbers accessible. Your bank's customer service line and the Social Security Administration's official number. If a deposit problem happens, time matters. The faster you reach the right office, the faster you can fix it. SSA's main number is 1-800-772-1213, available Monday through Friday, 8 a.m. to 7 p.m. They can confirm whether a payment was sent and when, which is crucial when you're talking to your bank. Step 5. Add a trusted authorized contact. Fifth, if you have a trusted family member or friend who helps you, consider adding them as an authorized contact on your bank account. Not necessarily a joint owner, but someone the bank can speak with if you give permission. This can speed up resolutions, especially if health, mobility, or stress makes bank communication difficult. Should you switch banks? A lot of seniors ask whether moving to another bank or credit union makes sense. Some people feel their bank is too rigid or too impersonal and want to go somewhere they believe will treat them better. This isn't a decision to rush. If you switch the account where Social Security or SSDI is deposited, you must update direct deposit information with SSA, and it can take 1 to 2 payment cycles to fully take effect. During the transition, keep the old account open so deposits don't bounce or disappear. If you choose to switch, contact SSA before closing anything and make sure the new account is confirmed and active. Credit unions are worth considering. Many seniors report a more community-focused experience and sometimes more flexibility during reviews. Credit unions are member-owned, and deposits are federally insured up to $250,000 through the National Credit Union Administration, NCUA. Similar to how banks are insured through the FDIC, if there's a credit union nearby, it may be worth visiting and asking directly how they handle federal benefit deposits and compliance holds. Watch for scams. We also need to talk about scams because confusion is fuel for criminals. Whenever there's uncertainty about banking procedures, scammers take advantage. Right now, some fraudsters are using the topic of bank verification to target seniors through calls, texts, and emails. The script often sounds like this. Someone calls claiming to be your bank or SSA and says your account was flagged. Your benefits might be interrupted, and you must act immediately. Then they ask for your Social Security number, account number, or other sensitive information. Hear this clearly. SSA and legitimate banks do not call out of the blue demanding sensitive information. If you get a call like that, hang up. Then call your bank or SSA using the official numbers you already know, not a number the caller provides, and report what happened. Final thoughts. Let's recap the essentials. We covered updated bank compliance practices tied to fraud prevention that can lead to holds or delays on federal benefit deposits. We explained the difference between strong garnishment protections and separate compliance holds. We discussed how SSI and SSDI recipients can face special challenges. We walked through practical steps you can take now. We talked about switching banks, credit union insurance, and scam prevention. Most importantly, remember this: you are not powerless here. Yes, the banking system is complicated. Yes, rules can change without being communicated clearly to the people most affected. But you have rights, you have tools, and you can take steps now to protect your money. The more you understand, the easier it is to defend your benefits and your financial security. That's why content like this exists, so you get information in a clear, honest, useful way. Stay safe, stay informed, and take care. Subscribe for more valuable updates.